So I'm going to start this off like I typically do whenever I'm working with any of my clients and I'm meeting with over a webinar. Cicily is going to be my client. So, we've joined into the webinar. I say, hey, Cicily, how are you doing today?
Hey, I'm great, Edward. Thanks for doing this for us.
No, of course. Even with everything going on, we still want to make sure that we're here for our clients. So, how's you and your family been doing? Everything good for you guys?
We're doing fine over here. We got a lot of food. We're doing well.
All right. Well, I mean, the big thing, as I talked to you about on the phone, you sent that form in about your mortgage, and what I'll do is I'm going to share a couple of things, as we go through this on our screen so that you can see it. That's why I definitely prefer to do it with this webinar approach, this screen share, so you can see what I'm doing. You can ask questions, and that we can come to a place where we can find something that's going to work for you and your husband and get you all the coverage that you were looking for. I'm going to share my screen here with you. Now, this was the form that you guys filled out, correct?
Yep.
Okay. All right. So, and from that, I'd just like to verify that, make sure that, we got the right form there that you sent in. And now this was the information that you gave me, your date of birth, height and weight. You don't use tobacco. You said his date of birth was unknown. Is that correct? You're still trying to figure that one out?
Yeah, he will not tell us how old he is.
Okay. But he still is.
He's like 26, but I think he's actually like 48.
Okay. All right. You said the only medication that you take, the heirs take some Tylenol from time to time, and you don't take any medications, correct?
That's correct, yes.
And you don't have any medical issues, no high blood pressure, heart attack, stroke, cancer, anything like that?
Nope. Thank goodness we're healthy.
Perfect. And then now the mortgage information, again, $265,000 mortgage that you just closed on. It's a 30-year term, right?
Correct, yes.
Bank of America, $1,358 per month is your payment.
Yes, that's right.
And primarily you were looking to get coverage on you because, as you said earlier, heirs does have that $1 million policy that you feel like is good enough for you guys, and you're primarily looking for coverage on you to protect him. Is that correct?
That is true, in case he reverts back to his childlike form, yes.
Just we can have fun with this too, even during these times. Okay, so let me go through and kind of explain a little bit about what my role is. And guys, I'm pausing in the presentation here. Right now, I'm using the PowerPoint in a PDF version. Okay, you can do that. It's a way that I like to do it sometimes because it's just easier to click through, find what works for you. So, I mean, the biggest thing with mortgage protection is we're trying to protect your most valuable asset. And most people think that's your home, right? Like your home is probably the most valuable thing that you guys own collectively together, right?
Yes, absolutely.
When it comes to owning your home, what is it that the bank really wants from you guys? Do they want the $235,000 or do they want next month's payment?
They definitely want next month's payment and the one after that and the one after that.
Exactly. And so what I want to make sure that all my clients understand is like the biggest asset that we're really protecting is your ability to be able to have the income to make that next month's payment. That's why we're doing a policy on you, right? Is to make sure that we're going to be able to make that next month payment, whether you're living, not living, disabled, critical ill, whatever you want to protect and cover, that's what we're going to be able to do. And so what I do is I represent about 40 different carriers, and I've looked through quite a few to see who could give you the best options based on what you guys were looking for. And my job is just to kind of help you through this process. We're going to go through and see what options that we can get for you, what those costs are, and then help with the application. We're going to be able to do all that through this webinar. What we do is not just protecting mortgage protection, but we're here for all of life's journey. And that might be mortgage protection. It could be final expense in the future. Maybe there's things with disability, critical illness. So once we get this taken care of, if you do have any questions or if any of those areas are places of concern for you, please feel free to let me know, because maybe we won't necessarily need to do it right now, but in the future, we can come back and look at how our company, Symmetry Financial Group, can help you in multiple different ways, not just the mortgage protection side, okay?
Yeah, I can definitely see us talking about, protecting retirement, because especially with what's going on right now, I've definitely got some questions for you about that. So.
Okay, well, yeah, let's get the mortgage protection taken care of first and foremost, and then we can either at the end of this talk about that some more or set a follow-up for that, because I'm with you. Like I can't believe what's happening to a certain degree, but at least I know that in this industry, I'm able to help clients really protect against things like exactly what has been happening within the stock market over the last couple of weeks. So
Sounds good.
now we verified the information, and I just like to make sure that I've gone over everything a couple of times. I didn't ask you about just as far as employment. Now, I think you're a healthcare worker, correct?
That is correct.
Okay. Are you still working actively right now, or what's going on when it comes to that?
Sure. I work administratively in healthcare, so we're doing a lot of work from home right now over the past week. But sure, yeah, I'm absolutely still working.
Gotcha. And you don't have any life insurance at work, right? You said you have personally none. It's just heirs that has coverage.
That's right. I'm on a contract basis, so.
Okay. I just like to double check some of those things. So I don't want to make any recommendations to you that you don't necessarily need. I want to recommend to you stuff that will be beneficial to you and get you the best value for what you're going to spend on this type of coverage. Now, what I've done too, and here's a little break, everybody. I'm going to run them through, as Nate was talking about, having virtual mentor. We have the needs analysis. They're in virtual mentor that you can put their information into. But if I'm going to do any of that stuff, I'm going to switch over and make sure that I have my screens ready and I have my virtual mentor ready to go. Right. And hopefully I have their information already input if I'm going to do the virtual mentor option, or I can click right here for the needs analysis. And again, I've already pre-populated their information, but I can go to this because I never want to put information in if I don't know what it's going to spit out while the client is on the line. Does that make sense to everybody? And hope everybody's nodding their head up and down. Like, I want to know what's going to come out when I hit submit. Okay. So have this stuff pre-filled. All right. Now back to our appointment. All right, Cicely, based on what you were telling me, I've been looking at a couple of different options, but before we get into that, if we don't get coverage for you guys, okay, and something were to happen to you, what would heirs be able to do with the house? Tell me what your primary concern is.
I would say that he wouldn't be able to make the mortgage payment and all the other bills. He would probably sell. I just don't know what that looks like.
Okay. And then I'm going to ask heirs. Heirs, how do you feel about this? The couple is there, we're not doing one-leggers even virtually. For you, heirs, I mean, let's say something were to happen to Cicely. How important is it to make sure that you do have something in place to be able to make that mortgage payment?
Oh yeah, without a doubt. It took two incomes to get the mortgage. It's going to take two to keep it.
Okay. Well, I just want to make sure that we were in the same place. And then once we find something that fits you all's budget, this is something that you're looking to do. You want to make sure that you put that protection in place so that if the unforeseeable happened, heirs, you can stay in the home. Is that correct?
Yeah, absolutely. We didn't see any of this coming. So,
okay.
Just got us thinking.
Gotcha. All right. There's a couple of different options that we can do this now that we know, okay, we need to put something in place once we find a number that works. Number one option is full mortgage payoff. That's where we put a policy into place, Cicely, where if anything happened to you at any point in time, the amount of death benefit that heirs would receive would pay off the entire mortgage. We're covering a lot more, so it can cost more. If that doesn't work for the budget that you guys are looking at, okay, the next thing that we can do is do partial mortgage payoff. Because as you said, you don't know how soon he would try to sell or how quickly he would have to do it. But if we could cover the mortgage for 2, 3, 4, 5 years, right? And he can make that decision in his own time of when he wants to do that move, would that work for you guys, do you think?
Yeah, I could see that being very mumuch a viable option for him.
And the kicker to that is we also have the ability to throw what's called accidental death onto that as well. So that if the death is accidental, which is usually more of a surprise for people, then it would actually double down on the amount of coverage that he'd get. And it might actually be enough to pay off the whole mortgage at that point in time. Okay. So those are the two main options. And I'm gonna pause here. Again, guys, equity protection and really describe out the critical period. This is again in the PowerPoint. Take a look at it, make sure it works for what you're wanting to do. So after I present those options, guys, we've talked about the 3 different options that we can do. Now, Cicely, let me show you the options that I've worked up for you. What I want you just to let me know what fits the budget. It's okay to say that's too costly. What we can do is make sure that we can find something that meets your budget and takes care of this need. Is that fair enough?
Yeah, that sounds great.
So let me go over the carrier that I found really meets you all's need the most. is a company called Mutual of Omaha. Have you ever heard of them before?
Yes, we have, absolutely.
Okay. The first option that they came up with, this would be to pay off, this is a $250,000 death benefit, so more than enough to pay off your mortgage and leave a little extra there for heirs. It's a 30-year premium guarantee policy. What that's going to look like for you is going to be $111.48 a month. How does that fit within the budget that you're thinking about?
You know, given that we're not exactly sure even what's going to be happening with the employment and so forth, it would be comfortable to look at something that was probably under $100 for us.
Under $100. Okay. Let me go back out real quick. And like I said, we can quickly make those changes. So if we did something where we did call it, and guys, the way you do it, the way you navigate it, you'll keep it in line with what you normally do. But I'm going to go right back in. We're going to throw that accidental death that I was talking about, Cicily, on that. All right. And so this option, okay, now that we're getting those numbers, and these are direct from Mutual of Omaha, that's going to come in if we did $150,000 30-year term for you with $100,000 accidental death benefit. So it still would be a total of $250,000. That's going to come out to be about $45.61 a month.
That would be super comfortable for us. Thank you for shopping around on that a little bit.
Of course. All right. So with that, let me go over directly to Mutual of Omaha's website, and we can get started with their actual application. So I'm going to go here for you. And so this is directly my direct login here to Mutual of Omaha. And let's open up their electronic application. And so this application will take all your information here online. I'll shoot you a quick email after this is over, or the email will actually come from Mutual of Omaha, and you'll be able to digitally sign it. Once you digitally sign it, you'll just let me know that it's digitally signed. We can actually stay on this webinar here while you do that. And then usually it takes them, this is a simplified issue policy. You don't have to do blood or urine or anything like that. Within hopefully 2 to 3 days. And I know everybody thinks a little bit up in the air, it's a little chaotic these days, but typically within 2 to 3 days, we should know something, and I'll of course let you know as soon as we know, and we can go from there, okay? So now I go through the application process, guys, okay? So I'm gonna put a pause right there. This comes back to walking through these e-apps, right? As you saw, as I was going through, even though there's a lot of stuff written on the screen, I had it up there for you to be able to read, but I'm talking to you, right? I'm having a conversation with you. I want to engage with you. If I'm filling some stuff out, I want to switch over to that particular page and show you what I'm filling out. As I go through the application, I have that application up the whole time while I'm typing, because yes, they will get, I've had plenty of clients who are like, oh no, you typed in, you added an E to my name. There's no E in it, right? Or XYZ, whatever it might be. I want them to see what I'm doing and where I'm putting it. And I'm letting them know this is going into an insurance carrier's website. This isn't going, I'm not jotting this down on some pad for me later. This is going into the insurance carrier's website. We walk all the way through. They see me hit submit at the end. It sends them that email. I'm asking them, sister, did you get that email? Did it just come through? Can you check your email real quick? Oh, you got it? Okay, great. I'm gonna log out of this right now. I'll let you go ahead and sign it and let me know when that's complete. And guys, it really, it can flow very smoothly if I just keep it with that in mind. And I know that this was a very condensed version of that. You want to continue to have conversations. You want to dive in. You want to build rapport. You want to find out and ask, get on that why train and ask questions about what it is that they're concerned about, why they're concerned. But as I presented that, you saw like I never had to necessarily put my license information or this, that, and the other. Like that stuff is ready, and I have some other screens that I could have popped up to show that had Cicely asked me that. But I think even just as simple as what we have on that first screen of the PowerPoint, where you can put in your name and your NPN number. And now we're getting into the transactional point. A lot of people have asked, well, what if I just tell them right up front? Well, I'm not trying to make it transactional in the beginning. I'm trying to have a conversation with the person. I'm not trying to treat them like an object, right? I'm not just giving them my rank and serial number. I'm having a conversation with Cicely to discuss what's going on and see how can I help them out the best possible way. And then when we get to the transaction point, now I can, if asked, share that information. Because people want what we have more than ever right now. Whether it's on the annuity side, whether it's life insurance side, whether it's any of the critical, chronic, long-term care, it's on their minds once again. They're asking the questions. So let's get out there. Let's be available as often as possible.